Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, I'm Vinay Joseph and welcome to another episode on our 2023 Outlook. Today we look at what investment strategy one should adopt to navigate the coming year. Now 2023, the global backdrop remains very challenging, given the heightened risk of a slowdown and a possible recession in some of the key markets. However, India's growth inflation dynamics remain superior compared to peers, and this could support Indian assets. But in our view, 2023 investors need to be selective in taking risks while keeping a greater margin of safety. So overall, we believe it will be prudent to be safe in 2023. Now, the SAFE acronym denotes 4 strategies. S for secure your yield, Y relative yield opportunities, A for allocate to long-term value within equities, F for fortify your portfolios against surprises by defensive assets, and E for expand beyond traditional Y alternative strategies. Now, let me elaborate more on the respective strategies below. First, secure your yield. Now, this is our foundation asset class view for 2023. We are more balanced in our asset class outlook given the challenging backdrop as mentioned earlier, as this raises the downside risk for equities given elevated absolute and relative valuations of Indian equities. In our view, a balanced portfolio with a mixture of bonds, equities offers an attractive income opportunity. Now, within bonds, we like the government and high-quality corporate bonds because they are attractive given the significant widening of spreads last year. We further are overweight the short maturity bonds as the flattening of the yield curve has improved the carry for them. Within equities, we maintain our preference for large cap equities as they have a greater margin of safety both on valuations and earnings compared to mid-cap and small-cap equities and perform better during tightening financial conditions. Our second strategy out of SAFE is allocate to long-term value. Now, while large cap equities and bonds provide you an immediate income opportunity, we believe this has to be balanced by exposure to structural themes which have a longer runway for growth. Now, within allocate to the long-term value, we like 3 strategies specifically. First, financials as a sector. With bank credit growth accelerating strongly after years of dormancy, we are seeing greater confidence in the earnings delivery of financials. This is driven by lowered credit costs, improvement in asset quality ratios, and better credit offtake. Second, domestic cyclicals. We believe domestic cyclicals are likely to outperform global cyclicals given our strong domestic fundamentals, macro, as well as superior earnings expectations and much better valuations. Lastly, investment-led themes. We believe multiple structural as well as few cyclical drivers remain in place for a sustained revival in the domestic investment cycle. And within this theme, we like the manufacturing and infrastructure space specifically. The third strategy which we like within the SAFE is fortify against future surprises. Now, we've spoken how bond yields can secure your yields and how long-term value offers room for optimism in 2023. We should not forget the global backdrop, where there could be some downside surprises. Further, Indian markets have significantly outperformed its peers, which does lower the margin of safety. So having a possible defensive portfolio tilt through cash, gold, and adding some equity sector defensive positioning through consumer staples is important so that you can ride out any unexpected jump in volatility. Lastly, we think is expand beyond your traditional. Now, there's been an unusual rise in stock-bond correlation in 2022, and this might dissipate a bit in 2023. But the experience teaches us a valuable lesson that you need to have exposure to relatively uncorrelated assets within a diversified pool so that they act as less volatile substitutes for traditional assets. And this is where liquid alternatives, market-neutral strategies are potential opportunities. So that, in short, is what we think how investors should navigate 2023 by adopting the SAFE strategy. If you like this podcast, please subscribe. And for more details on our report and SAFE strategy, please reach out to your relationship manager for a copy. Have a great day and a great year ahead. Thank you all.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.